Hello, in this video I'm going to do tasks 1 and 2 of the first AAT sample assessment at level 4 for the Applied Management Accounting Unit, otherwise known as AMAC. Okay, so here we have the new way it will look. This is the mock on the AAT sample assessment. Notice it will not take into account answers to task 2, 4 and 7. These are the only tasks where you're going to get written answers required in the live assessment. It's a 3-hour exam. I think that's very generous, to be honest. But see what you think. 8 tasks, 140 marks altogether. Right, so task 1, 12 marks, will be about budgetary processes, responsibilities and uncertainties, largely sort of knowledge-based questions around the budgeting process. So let's have a quick look. You are collecting budget information for the company for which you work. Identify who would be involved in each of the following tasks. So overseeing budget preparation, well, that's the job of the budget committee. The budget accountant gets involved with the budget preparation. The senior manager obviously has input because they have like the industry knowledge. So that one will be budget committee, overseeing it. Assisting in the budget preparation, well, that's kind of a 2-person job. You would have the budget accountant doing the actual figures and the senior manager with some input as to what those figures should be. Identify the individual group that you will need to contact for information about each of the following tasks. So drafting the direct materials budget. So you need to know what you need for the process. So that would be the production manager, but you also know how much you're going to spend. So production and purchases manager. Agreeing planning assumptions is back to the budget committee as discussed previously. Part C, identify the most appropriate treatment for each of the following costs. Right, so here's our drop-down choices. So some of these are fairly obvious. Office stationery, for example, must be admin overheads because it's the office. Production, labour, sick pay. So we know that sick pay is not a direct cost because obviously when someone's sick, they are not producing the items. And we know it's an overhead. So we could either allocate it to production overheads, or we could charge to production based on a labour overhead rate. So the answer is that one, charge to production based on a labour overhead rate. Why is it not allocate to production overheads? I think the only logic I can give there is because it's to do with labour, which isn't really a satisfactory explanation, but we'll go with that. Production labour basic pay, that one's simple. It's a direct cost. And then the stores department, so the stores is where you hold your raw materials, etc. So it's linked to production. Nothing to do with the labour hours this time, so that one will be allocate to production overheads. Part D, complete the following statements about budgets. Detailed budgets prepared by production managers are referred to as, so bottom up, they're involved and usually have so they are generally thought to be motivating because the managers have some ownership over those budgets. Effect on so that will be the budget holder, the person that's got to meet the budget. They are brought together to form so it's like the overall budget, so that's called the master budget. right? So from what I'm seeing there, we need to have knowledge of bottom up, top down, incremental, zero based. You know, they're the options. Make sure you know what all of those are, and sort of this business of how you treat the costs, and as well the different responsibilities. So if you know your stuff, fairly straightforward. Task 1. Task 2, 24 marks. So 24 marks altogether. 16 of these marks are going to be for written responses. So that leaves 8 marks computational. So the task will be about budget preparation, evaluation, and revision. So that tells me that there's going to be writing about this topic. So obviously when you're doing your revision, be prepared to write on the topic of budget preparation. I'll show you what I mean in a second. So this task contains A to C. Oak Fair Limited is preparing its resource budgets for the next period and has the following data. So this is the number of units. Each unit produced requires 0.6 kilograms of materials. Closing inventory will be valued at the budgeted purchase price per kilo. We've got some information about labour, production overheads. I'm just skimming through that now. And it says complete the 2 working schedules using the information above. Interestingly, if you click on references here, you can have it side by side, and this will work like this in the real exam as well. Right, so materials first of all. So I'm going to start off with this box, working out what's going to be used in production. So I know that each unit needs 0.6 kilograms. And I know that I'm making 174,000 units. So 0.6 times 174,000 gives me 103,700 kilos. And then I come to this box to work out what my purchases in kilos needs to be. So my purchases in kilos, oh, sorry, I've put the wrong figure in there. 104,400, that one should be. Right, so then to work out the purchases, I'm going to say, right, I need 104,400 to use in production. I need to add on what I want to finish with, my 3,700 kilos of closing inventory, and then subtract the 4,400 kilos of opening inventory, because obviously I don't need to buy them because they're already there. So that gives me 103,700 to be purchased. I can then multiply by the £1.25 per kilo, which gives me 129,625. And then the used in production figure is going to be, so basically the opening inventory plus the purchases has got to be equal to what's used plus the closing. So if I do 5280 plus 129,625 and then subtract the 4,625, then I get 130,280 used in production. For the labour, the key here is to start by working out the total hours. So the total hours I'm going to need for labour, let's get the labour information. So 5 minutes, I'm in hours, so I would start by doing 5 divided by 60 to convert that to hours, and then multiply it by the 174,000 units that I'm making. So from there, I calculate that I need 14,500 hours altogether. How many have I got? I've got 82 working 120. So 82 times 120 is my basic hours. So 9840 times that by £9. And as I said, I've calculated that I need 14,500 hours. So therefore, I need 4660 overtime hours. Overtime is paid at 50% above the basic rate. So 50% of 9 is another £4.50. So that gives me £13.50 an hour times by the 4660, which comes to 62,910. Press the references button again, it gets rid of that. And I'm on to my written part of the question. So part B, Oakfair Limited is looking to complete the sales budget for the next year. It says identify 4 factors that could limit the total sales in the sales budget. 4 marks, identify 4. So it's literally a list of 4 factors. And don't have to explain them. There's only 1 mark for each one that I state. So what's going to limit the sales? Well, it could be shortage of, or rather than saying shortage, let's say availability of raw materials. It could be availability of labour hours. It could be availability of machine time. Could be availability of capacity. It could be available, I'm going on, I've gone on for now, availability of finance, right? That's the only level of detail you need. Now, incidentally, if you put more than 4, it's likely that they will just mark the first 4. You can't sort of hedge your bets, just keep putting loads of answers and hope they'll pick out the 4 correct ones for you. All right, so if it says identify 4, probably just put 4. So that should be quite straightforward. Then Oakfair Limited has now completed the sales budget, which shows a 15% volume increase in sales for the next year. So 15% volume increase in sales. Oakfair has produced the following draft overheads budget. So you can see here, here's all our overheads. And we've got the previous period, and then we've got the budget. Together with the budgetary assumptions used. And we have to evaluate the draft overheads budget, taking into consideration the assumptions used in its preparation. Right, now I would say that you can be almost certain that you're going to get a question in your real exam where you have to challenge budget assumptions like this. So I think it's quite straightforward. So it's basically saying that we've got a 15% volume increase in sales. We basically have to discuss whether the budgeted figure looks reasonable or not. And it gives quite a nice structure because you can just sort of speak about each one as a sort of paragraph. But remember, it's evaluate. So you're basically got to discuss whether, you know, what's good about the figure they've put in, what's perhaps not quite right about the figure they've put in, and don't be afraid to say, you know, where's the backing information here. Right, so starting with factory rent, I would personally have a little mini heading, and then let's have a look at what they've done. So they've said, due to the increased sales for next period, an additional 10% of factory space will need to be rented. So we know that factory rent's usually a fixed cost. Our sales are going up by 15%, but we're saying we need an extra 10% of factory space. So my first question is, well, why is it not an extra 15% of factory space that we need? My second question is, does rent really work like that? Are we able to just get another 10%? it's not like a variable cost. You're either renting a place or you're not. So, you know, maybe that's a little bit questionable. So what I have written, I've actually written this out on a piece of paper, which I will attach, but I'll just do the one for the rent. So I've said here, the budget has increased by 10% in recognition of the additional space needed to accommodate the increase of 15% in sales volume. It is unclear whether a 10% increase in space will be sufficient to house a 15% increase in sales volume. Why is it not a 15% increase? Right, so I've put a question within my answer, we don't know. The other issue with this budgeted figure is that rent is a fixed cost. So is it actually possible to just increase it by 10% at the same rate as the existing space? Right, so I would type it like that, then I would come on, and then the next one is factory insurance, and I would use headings like this in my answer, space out my comments so that the examiner can go, yes, a mark, a mark, a mark, really easily. So I won't type the rest, but factory insurance, it says no increase in premium anticipated from the insurance company. So my question here would be, well, do the insurance company know that we are looking to rent more space, have a bigger factory, have more in it? Might be, you know, they're saying no increase in premium anticipated, but that seems a bit unlikely if the insurance company were aware of all the facts. So just to read you what I've put, I said no increase has been included in the budget, despite the assumption that the business will be renting a larger space. This seems unlikely, as surely greater space comes with increased risk and hence increased insurance premium. Moving on to administration. It says half of all administration costs are fixed, with the remainder variable. Right, so if last year's figure was 42,000, that means that we've got 21,000 that was fixed and 21,000 that was variable. So I did a little calculation here and worked out that 21,000, which was the variable bit from last year's figures, with an uplift of 15%. Let me just work that out again. So where's my calculator? 21,000 uplifted by 15% gives me 24,150. And then if I add on the fixed bit, the 21,000, then that comes to 45,150. They've put in 48,000. So that suggests that they think there's going to be some sort of increase in the fixed element of the admin overhead. So to get that across, I have written, as I say, I will put a copy of the writing with the video as well, but I've written, following the given assumption that half of the admin costs are fixed and the other half variable, the new budgeted admin cost is expected to be 45,150, and I've shown that calculation that I just explained in brackets. The figure included in the budget is £2,830 higher. They've put in 48,000. So presumably there is an increase in the fixed cost that has also been factored in. Right, then I'd come to my next heading, sales and marketing. So I'm told here a new marketing manager is to be employed at a cost of £27,000 per year. Right, so if I take last year's sales and marketing figure, 63, and I add on the 27 for the new marketing manager, actually gives me 90,000. They've only put 80 in the budget. So they've brought in the cost of this new marketing manager, but then they've docked what was previously spent by 10,000. Now, bearing in mind we're in a 15%, we've got a 15% volume increase in sales for next year. Doesn't really make sense that we're cutting back on some of our marketing expense. But maybe the new marketing manager is, I don't know, maybe going to be super efficient. So maybe we've wasted some money last year that wasn't effective. We don't know. So we kind of need to discuss that. So I have written this figure would have been expected to be £90,000, assuming sales and marketing costs stayed the same, and then add the 27,000 for the new marketing manager. However, the total cost is in fact £10,000 less than this, which suggests a reduction in the budget for other marketing activities. Somewhat surprising given the planned 15% increase in sales volume. Then on to distribution costs. So we're told that they are variable. So if we work out what 22,000 with a 15% uplift is, that would come to 25,300. Again, they've whacked in a bit extra here. So again, not sure why, but I mean, I suppose just thinking about distribution costs, maybe there's been unexpected increases in fuel, for example, to do deliveries, or cost of living increases, so distribution companies have put up their rates. So what I wrote here was, these costs are stated as being variable, so a 15% uplift would work out as 25,300. It is unclear why extra expense has been included. Maybe it reflects higher fuel prices, for example. And then finally, head office costs. So we're told, we probably assume that these are fixed, but then it says head office will relocate during the year to a larger site. Well, that sounds pretty expensive to me, you know, a big move, reorganisation, that comes with a cost. Unless, of course, the largest site is in a cheaper location, which I didn't actually think of when I wrote my answer. So what I did write was an increase of £3,000, brackets, which is under 3%, seems unlikely given the planned relocation to a larger site. I think I would now add to that, however, it could be that the new site is in a cheaper location, which has counteracted the additional costs. Probably add that as an extra sentence. Right, so I think that's a pretty fair question if you get something like that. Fairly easy to go through methodically. As long as you've got good knowledge of cost behaviours, because it'll work out what you think it should be and then discuss why they may be put in a different figure. Okay, so that's the end of task 2.